So the question I ask, and I think it's something that we all need to figure out, is when's the best time to put a stop loss, and how do you get out of bad trades?
So the time to put a stop loss is before you even plan on getting into a trade. So every trade you take, you should already have a set stop loss and a set TP, right? So trading is all about calculated risk, right? So before you enter a trade, you should be willing and understand, like, okay, I'm willing to risk 2% on this trade. Okay, how much are you willing to gain? Set yourself rules up for that. You know, for us, we got to the point I was explaining earlier, the precision of trading. We're entering at a very precise way of the market, so we can have tighter stop losses with risking the same amount of percentage. You know, 2% on a 10 pip stop and 2% on a 50 pip stop is a whole different ballpark, right? So you should have a stop loss on every trade, because the biggest thing about trading is just protecting your capital, right? If you enter a trade without a stop loss, it's just like, it's not very disciplined, right? It's the worst possible thing you can do, because you never know what can happen in the market. You know, a lot of people didn't have stop losses and they're not paying attention to fundamentals. You know, last week they had elections in the UK, right? Yeah. So old boy got reelected, whatever happened, and it went up, right? And it's crazy because, you know, the people that manipulate the market, you know, institutions, firms, whatever you want to say, they use those elections and fundamentals as a reason to push the market however they want, right? So you know, if you don't have a stop loss or something like that, like, you're gonna blow your account up, right? And you don't want your customers, you don't want your student base, you don't want your family to come into something and kind of half, you know, I'm not gonna use the word, but, you know, they're just like gambling. They're not treating it as a profession, right?
Now, if you put your stop loss like not too low, you're gonna just hit it almost a lot of the times, right? So do you have a specific price that you put it down? Like, is it 5 pips, 10 pips?
So we enter off these institutional candles, right? So the majority of the volume in the institutional candle is at the open of the candle and the 50%. So we usually put our stop loss at the close of the candle.
The close of the candle.
Yeah, so I mean that's why they're tight. It's like 10 pip stops, 15 pip stops, you know, 5 pip stops, even 3 pip stops, right? Because we're going from the lowest time frames to the higher time frames. All these concepts, they work from any time frame to any time frame. Like if you have like premium trading, you can go to the 30-second time frame or 15-second time frame. The same concepts work on those time frames as well, right? So I mean the stop. It's just, you should always, I mean, you need a stop loss, right? You need it. When it comes down to the take profits, it's just like, you know, just target areas where, like today I was breaking down stops and I was breaking down targets. So targets are places where banks exit and enter, right? So they're always leaving behind positions because they're always hedging their positions. You know, they have so much money that, you know, if they just buy and sell, buy and sell, buy and sell, they'll just move the currency any type of way. So when they enter the market, they have to sell to buy and buy to sell, right? So when they exit and enter the market, when they let go of buying pressure and selling pressure, it moves the market the other way. So we're pretty much entering the market when they release buying and selling pressure, which pushes it in whatever direction we kind of want it to go. Does that make sense? It's more of a visual thing, but
you also talked about hedging.
Yeah.
Do you hedge? Like,
So
like the stock's going in one way, you buy the opposite, so now you're hedging with that.
Yeah.
Do you ever do that? I know institutions do that.
You can. It's more like advanced. Like, you want to get people to the point where they can at least sell. Like if you're in a downtrend, you want to get them to the point where they can consistently make money just selling the lower highs, right? And then eventually you get to the point where they can understand how far a move might go, like measurements, right? And then they can buy the lower low, which, you know, 80% of your trades should be continuations, right? 20% reversals. So buying a low to then come and sell another lower high. Does that make sense?
Yeah.
Yeah. So I mean, you can do that a little bit too.
Do you do hedging?
A little bit. I mean, we don't send out hedges like check trades. We just, you know, safe trades that are reliable. You know, that's the goal.
Okay.
Like the safest possible, the smartest things. You know, waiting for confirmations. We do a lot of waiting. And the reason why is because we want the best quality, because it's investing.
Yes.
A lot of people treat it as a game or a hobby or whatever. You know, I was talking about earlier, you know, most hobbies don't make people money, they cost people money, right?
Sure.
So it's just like, you don't want trading to be a hobby. Yeah. Do you have any other questions?
No, that's good. That's good.
All right, so